All right, let's dive right in. If you're a trader, you know the obsession, right? That constant hunt for the perfect entry. We're always looking for signals, patterns, that one exact moment to jump into a trade. But what if I told you that your success has less to do with how you get in and everything to do with how you get out?
We have all been here. I mean, look at this. You're staring at a chart, you're in a live trade, and the questions just start flooding your mind. Where do I get out? Should I use a fixed target? A trailing stop? How wide should my stop loss even be? That uncertainty can be absolutely paralyzing. And this really gets to the heart of it, and it's captured perfectly in this quote from trader Lance Beggs. Your success in trading has more to do with how you exit your trades than with your entry. I mean, really think about that for a second. For the exact same entry, your exit can be the difference between a profit, breaking even, or taking a loss. The exit is truly where the game is won or lost.
Okay, so if the exit is that important, the logical thing to do is just find the perfect one, right? A single bulletproof strategy that works every single time. Well, let's put that idea to the test and see how it holds up in the real world.
Okay, take a look at this first scenario. We're in a choppy sideways market. Let's say we went long. If you used a simple profit target, you could have been out at point A for a nice, clean win. But if you tried to let your profits run with a trailing stop, the market chops back down and boom, it stops you out at point D for a loss. Here, the profit target was clearly the way to go. No contest.
And that wasn't just a fluke. Here's another choppy market. This time, we enter short. Taking a quick profit at target A or B, you get paid. But once again, if you try to trail a stop, you get knocked out for break even, maybe even a loss. At this point, you're probably thinking, fixed profit targets are looking pretty darn good, right? But hold on, not so fast. What happens when the market is anything but choppy? Look at this chart, a strong, beautiful downtrend. Taking that same quick profit at point A would have felt smart for a second, right up until you realized you missed out on a massive move. In this case, trailing your stop was by far the superior strategy.
And this creates yet another dilemma. In this trade, a tight stop loss gets you taken out at point A, right before the real move happens. To actually make money here, you needed a wider initial stop and a trailing strategy. So now we have a direct conflict. The best strategy for one type of market is the absolute worst for another.
So here it is, the core conflict. Profit targets are fantastic in choppy markets, delivering those consistent small wins. Trailing stops, they're the king in trending markets, capturing those huge home run moves. The problem, of course, is that you never know for sure which market you're in until it's already over. So the conclusion is pretty clear, isn't it? Chasing the perfect exit is a myth. It's a ghost. The most profitable strategy for one trade is going to be the worst for the next. The search for a single, fixed rule that works every time is, well, it's a dead end. So if chasing the perfect system is a dead end, what's the alternative? We have to shift our focus completely. We need a whole new philosophy, one that looks beyond just trying to maximize the profit on every single trade. And this is the question every single trader hits eventually. If there are no universally correct rules, then how are we supposed to build a strategy we can actually rely on day in and day out? Well, the answer starts with a new set of beliefs. First off, you got to accept that fixed rules don't work. Second, a good defense is way more important than a good offense. But the most critical belief, the one that changes everything, is this. The real damage from a bad exit isn't financial, it's psychological. And that leads to this fundamental shift in thinking. Stop trying to optimize for maximum profits. Instead, optimize for your trading psychology. You need to design an exit strategy that you can live with, one that fits your personality, your fears, and your goals. So what does this actually look like in the real world? Let's walk through a case study to see how you can build an exit strategy that's built around your own unique psychology. It really just breaks down into 3 simple steps. First, define your goals. Are you trying to hit home runs or are you looking for consistent income? Second, what's your view of the market that you trade? Is it mostly choppy or does it tend to trend? And third, and this is the most important one, what are your psychological triggers? Okay, let's use the author's own blueprint as an example. His goal? Consistent income. He's not swinging for the fences. His market view? The short-term markets he trades are usually choppy.
And his psychology? The one thing he absolutely cannot stand is watching a winning trade turn into a loser.
And now you can see exactly how those things create his strategy. Because he wants consistency in what he sees as a choppy market, he uses predetermined profit targets. Because he hates watching winners become losers, he aggressively moves his stop to break even. His entire strategy is a direct reflection of his psychology. It's built for him.
Now, this whole idea of a defensive psychology-first approach, it isn't just a theory. Let's hear from a few trading legends who built their careers on this very principle.
Larry Williams has this powerful mindset. He assumes every trade he takes is going to be a big loser. Now, why would he do that? It forces you to focus relentlessly on defense and risk management, instead of just daydreaming about profits.
And then you have Mike Reed's advice, which is just brutally simple. The moment the trade isn't doing what you expected, the moment your reason for getting into the trade is no longer valid, you get out. You don't have to wait for your stop loss to get hit. And finally, this powerful insight from Connors and Roschke. You have almost no control over how much profit the market is going to give you, but you have absolute control over how much you're willing to lose. That, not picking winners, is your true power as a trader.
So in the end, the real skill isn't finding winners, it's mastering the discipline of not losing. It's about building a defense that protects both your capital and your mind. So I'll leave you with this one question to think about. What will your exit strategy say about you?